Welcome to Bears in Exile. Today is Thursday, June 23rd, and it is time for the market overview. We will be looking at all our regular symbols, and we'll also be looking at the financials. Should we run out of time on the first video, the financials will be covered in a second video. And today was a very nice day. Last night we talked about we had the red bar and it was below these two candles, and we did not like that. We said that we were going to have some trouble most likely, and in the daily running thread in the very early hours we were talking about, well, we were further expounding upon this, and sure enough we had a nasty move down. Euro fell a couple of pennies, very big intraday move. And at its lowest it was 200 plus points to the downside, and in the daily running thread today we were talking about how if we were able to come up and make a hammer, that would be fantastic. We also gave 2 points to watch out for, which was minus 120, and I think the other one was minus 80, but I may be remembering that wrong. And sure enough, once we broke the 120, it was good. We had some movement down after that, but that was enough, and it went back up, and it surpassed both of the targets and gave us this hammer. We also talked about TNA, but I will reserve that for when we get to TNA. A lot of people are going to be cheering and saying this is it, this was the bottom, this proves it. And, it certainly could be. The one problem I have, the one thing that I want to see is getting above these two candles again. And we're very close to that, but it is something that needs to be done. Once we do that, we do have the upper Bollinger Band here. It would be nice if that was farther away, but we're not. If we get above this, we shouldn't have a problem going up and testing the bar. If we're able to turn all of this around, we still have price consensus way up here at 12,450, 12,580, and 12,750 roundabout. And those seem like they're way far away, but we might be surprised. Going off through the SPX, we have a giant hammer. This is a magnificent hammer. Very bullish, just like the Dow. And just like the Dow, except to a greater extent, we have these 4 candles. And we need to clear these. Once we do, we should be in a pretty good spot. And we do have the upper Bollinger Band. We do have a completely formed bar, unlike the Dow. So certainly that could lend some resistance. Do we have enough space here for a complete cross before entering the bar? We're going to have a really good move in order to do that. So we'll have to wait and see. Secondaries are mixed on both the Dow and the SPX. The biggest one, of course, being the MACD, which is still ticking up, which is a very good sign, and the histogram is also ticking up, which is also a very good sign. On the Dow, the MACD histogram was equal, but the MACD itself is still in positive area. Secondary is mixed, so we still need more data, but it is certainly encouraging, but we don't want to get ahead of ourselves. Always cautious. And on the VIX, we have almost a inverse hammer. I guess you could classify it as an inverse hammer. The wick is slightly longer than the body, so not the most beautiful inverse hammer, but we'll take what we can get. Secondaries mixed, although the MACD has crossed over and the histogram is ticking down. This is a nice sign for further down on the VIX and up in the market. We do have a really piddly looking bar to contend with that shouldn't be too much resistance should we slam into it with force, and it will collapse very quickly should we get that. So that's very encouraging as well. XOY, we had all of that oil released by Obama. We did get a hammer today, which is nice. You know, I am not of the opinion that lower oil is great for stocks. I mean, certainly you have airlines and other things that are massively dependent upon it. But typically when oil goes up, the market goes up. At least we have that correlation in the, immediate past. So I would actually prefer this to go up to rally stocks. But, and certainly we could. We do have a downtick on the MACD histogram, but the MACD has crossed over and could go up. Other secondaries are mixed. And this big hammer, if it goes up, that's fine with me. That's a good sign. TNA, we don't have a hammer. It is not, the wick is not longer than the body. Had a fantastic move today. We were talking about this in the daily running thread today. And those trades did work out very well. It has cleared the other areas, so a move up here does make sense. We do have a bar that is completely formed and has separation, and we have the upper Bollinger Band, so it might be rough going if we do want to rally, but this looks nice. UUP, big gap today, and we do not have an inverse hammer, but we do have a bearish bar. So that would lend weight to it being able to be sucked down. The lower price consensus area is right at the bottom of the bar, right here, about 21.35, and a move down to fill that gap would be very nice for stocks. Should we get that, it'll just be a question of, is it going to sit on the bar again, or is it going to go lower? And we'll have to wait and see. That's just all there is to that. The secondaries are all mixed. MACD still needs to cross over, and if we get that, we could have a very nice down move, which will be very, very good for stocks. FXE. We had the NDE on Europe, them agreeing to the terms of the bailout. Nice move up. It is not a hammer. We have a little wimpy, terrible bar here that should not give too much weight to sucking it back up by itself. But if the dollar is going to weaken, then this should go up. If we're able to cross the middle Bollinger Band, that will be wonderful. And I do theorize that if things continue to go well in Europe and we're able to make a new high on the euro, that will be incredible. And the rally is really going to take a lot of people by surprise, and that's yet to be determined. So GLD move down, big move down, indecision candle yesterday. Price did go into the bar. We do have a hammer, so I would think that this is overdone. There isn't too much room for there to be a complete crossover prior to entering the bar, and if the dollar does go down, of course this will go up. Big move up on the dollar, big down move on gold, completely makes sense. Secondaries all headed down, so that's unfortunate, but I really don't expect this to be a long-term problem. And our perhaps least favorite SLV, essentially flatline, double flatline once again. We have a hammer. Really wish this would just get it in gear and decide what it wants to go do with itself, but it isn't, so that's what it is. And I am staying away from silver. This video is almost at just crossed 10 minutes. We're going to do the financials in a second video, so stay tuned. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you very much.